Hello, it's Binni here. I've been covering Hang Seng Index Hong Kong markets since the start of since the start of this year. And the Hang Seng market has been rallying. So people are talking about it. Of course, we know that with DeepSeek AI, it caught the world by surprise. And this brings a lot of interest into China tech. But I think that one of the bigger questions would be, okay, is the rally coming to an end? Or are we in a super bull? So these would be very strong questions, and I hope to be able to answer your questions in this video. So first, let's talk about why I think that at that point of time in Jan was a very good point to buy into Hang Seng Index. If you have a look into the equidistance channel that I'm drawing here, so I connected this point, and that pretty much predicted the low point here. So when I did the video, all right, it was somewhere around here, if I don't remember wrongly. That's because it was above our buy signal. So this was the resistance, and that's about 20,000, and that was our buy signal at that point of time. Of course, then price went further higher to close above the second resistance level, and this area around here became our buy signal again, right? But again, that why am I interested in Hang Seng Index was because it was a very nice uptrend, right? So this was the higher low, and this one by stopping here is also a higher low, right? And hence, if I were to use the equidistance channel to project into the highest point, then I'll arrive at around 25,000 as the potential high of this equidistance channel. So based on technical analysis, the use of equidistance channel, then it is logical for price to move until here. All right. So this is based on if you use equidistance channel, if it gets supported at the bottom of the channel, we will assume that it's logical to assume to move to the top of the channel, right? But of course, then along the way, we will know that it's going to go up, down as a correction. The problem is that many times we want to just be able to sell at the high, right? And the question would be, how do I know that the momentum is winding down before, all right, if I would want to take some profit along the way? Of course, the highest point here, which is the all-time high here, and price is around 23,000. It's going to be a point that the market is going to look at for possible profit take. But one of the methods that I like to know on how to know that momentum is coming down is to put in a moving average, a short-term moving average. So you might want to choose like a 3 period, 5 period, or 10 period. But I want to do something that can let me capture most of momentum, but not yet to sell early out of this like a huge surge here. So I like to use a 8 period moving average. In this case here, a 8-day moving average. Right, so let me just turn on my 8-day moving average. So this is an 8-day moving average, the blue line. That means that if price doesn't close below the 8-day moving average, I will be still assuming the momentum is quite strong. So under what condition will price close below the 8-day moving average? Number one is that when we see a consolidation in price going flat, and the 8-day moving average will catch up like this, okay? And ultimately just a slight move down would break below that 8-day moving average. Now the other way is, of course, for price to have a deep correction, which is not something that I'm hoping for. Right, so look out for how this 8-day moving average is going to trail the prices, and that could be a trailing stop in a strong upsurge of this momentum. And again, look out for 23,000 as a key resistance, and lastly, the top of the equidistance channel. All right, are we out of the bear market? And that will be the next question that I'm going to talk about. Let's take a look at HSI here. So obviously from the weekly chart, it is still on a downtrend. Let me just remove all my lines. It is still in a downtrend. So this is still pretty much right in this downtrend. okay? But one thing is that if price can close above this recent high, which is 23,500, then I think that we are showing technically the pattern of a double bottom. That means that this double bottom could potentially come true, all right, if price can close above 23,500. And I think that the market will be watching very much, right? If it can close above 23,500, then I think that we could have a much more substantial price movement, and like I said, right, for potential move towards 25,000. Of course, all these are dependent on future price movement. I'm just providing you all the price point here. The key thing is that remember to trade safe. Remember that until 23,500 is broken, then HSI is still downtrend at this moment. Have you clicked the subscribe button? And how about a like? If you're interested to tap into the short-term opportunity of HSI, I mean, without buying into the stocks, but you just want to trade the index, then you might want to explore DLC's daily leverage certificates issued in SGX. Again, to understand if this instrument is suitable to your risk profile. So I have right now the DLCs that's issued by UBS. There are 3 issuers in SGX, SocGen, UBS, and Mirror Asset. You can choose from either one. But let me just go through how you can trade into the DLCs. So let's say, for example, you want to trade into HSI. So click HSI, and you think that you are bullish, then you choose a daily long. If you think that you're bearish, then you choose a daily short. All right, so let me just streamline to choose a daily long. So since there's a bullish momentum right now, so these are the various DLCs. So to choose a DLCs, what you have to do is to take note of the sensitivity. Okay, so this would be the sensitivity. So basically what this means is that the higher the number, right, it means that for one tick changed in the DLCs, that means for this one here, that if it wants to move by one tick, all right, for this particular DLCs, the index must move by 170 points. For example, for this one here, all right, which is one of the today the highly traded value, then for a one tick change, that means from 1.27 to 1.28, then the index must move by 18 points. So this is what is the meaning of sensitivity. So the idea is that the lower the sensitivity, the better it will be, but it also means that it will be more expensive for that DLCs. Of course, that you need to choose your direction. So this would be the daily long, which means that you will benefit if price is to move up, and as well as choose the amount of leverage. So this would be a 7 times leverage DLCs. This would be a 5 times leverage DLCs. Now leverage means that, literally, a simple way to understand it is that for every 1% move in the index, it will move by 5% for this DLC, which is 5 times leverage, and this will move by 7 times for this 7 times long DLCs. These are briefly the few things that you want to take note when you are trading into DLCs. If you need to, please go to this section here where you will have the education. Then click on that. You'll be able to know more about DLCs. I hope that this video is useful to you, because I covered the front part, which would be on the movement of Hang Seng, and as well as the instrument if you should be interested to trade into Hang Seng. Again, what I'm covering here is not financial advice, and you need to really evaluate whether any instrument, whether it's DLCs or whether stocks or any other instruments, whether it is suitable for your trading profile.